The decision to outsource in banking industry is associated with multiple types of risks, including risks associated with increasing labor and other process costs. In some cases, risks may not be significant when considered individually. But, when they interact with other risk areas, they may be excessive in aggregate. The decision to outsource may lead to increase in various risks such as strategic risk, reputation risk, compliance risk, operational risk, information technology risks, and legal or regulatory risk. Strategic risk in banking can arise from adverse business decisions and may result in adverse effects to earnings or capital. Bank may incur unnecessary cost by not choosing the right service provider. In addition, the bank may fail to implement appropriate oversight of the provider. To mitigate strategic risk, the bank should decide to outsource right service to right vendor. Reputation risk can result from poor service from third parties. Sometimes, third-party practices and activities may not be in line with the bank's practices. To mitigate reputation risk, the bank should ensure that processes followed by the outsourcing vendor are in line with the bank's own practices. If a bank has inadequate control systems in place, outsourcing in such a situation may increase compliance risk. To mitigate compliance risk, the bank should always ensure that adequate control systems regarding outsourcing activities are in place. Outsourcing portions of the supply chain processes to the lower quality vendors may hinder production and delivery of better services to the client, resulting to increase in operational risk. To mitigate operational risk, the bank should always follow stringent norms for vendor selection. Many outsourcing arrangements of banks are heavily dependent on internet access. Therefore, any breakdowns in connectivity and the need for an adequate information technology infrastructure may create technology risks. To mitigate information technology risk, the bank should ensure adequate information technology infrastructure. Outsourcing may cause increase in legal issues related to privacy, confidentiality, and security of business transactions of the bank. To mitigate legal or regulatory risk, the bank should have stringent terms in service level agreement with the vendor.